Begin in West Africa, Ghana to be specific. The country has released 124 Chinese gold miners who had been detained by immigration authorities and promised to set free the remaining 45 on Monday. That move came after the Chinese embassy in Accra reached an agreement with Ghanaian authorities in regard to a government crackdown which targeted illegal miners. Now, the embassy announced the news on its website, accompanied by a warning to Chinese gold miners in the country, advising those who have been targeted in a Ghanaian government crackdown to buy plane tickets and get back to China as soon as possible. In May this year, Ghanaian President John Dramani Mahama ordered a cross-departmental task force to crack down on illegal gold and diamond mining. Now, as of Thursday last week, 169 Chinese nationals had been arrested on suspicion of illegal gold mining. Ghanaian laws on mining and minerals stipulate that only Ghanaian citizens can hold small-scale mining licenses. Most of the illegal gold prospectors in Ghana are Chinese, with an estimated 50,000 miners settled right across the country. Elsewhere on the continent, Sudan has backtracked on a day-old order barring crude exports from South Sudan, diffusing tensions after days of saber-rattling between the two neighbours. The statement from Sudan said it could, however, reverse its decision if its southern neighbour stopped backing rebels operating in its southern frontier. It clarified that Sudan had given the South Sudanese government time to respond and maintained that pipelines may still be closed within 60 days. This standoff, even if it is eventually resolved, is a stark reminder of the unpredictability of this small but significant corner of the global crude oil industry. Industry sources say cross-border crude flows are continuing normally since oil operators had not been told by either government to stop any shipment or turn off wells. A stoppage would cut off the crude and transit fees that make up both countries' main sources of foreign income. The South African transport parastatal Transnet is marking a major milestone with the supply of train locomotives and coaches to neighbouring Mozambique. The final 7 units that make up a $20 million contract to supply rolling stock to Correio de Desenvolvimento do Norte, or CDN, and Central East African Railways left Durban Harbour on Saturday. CCTV's Angelo Coppola has more.
Railways operator CDN CER invested $20 million to buy 18 refurbished coaches and 7 locomotives from Transnet. The last of the wagons and locomotives was shipped to Mozambique recently, and they are to be used on the Nacala Development Corridor, the 900-kilometre link connecting Mozambique to Malawi.
We are going to invest a lot of money, more than $1 billion US dollars, to bring the coal from Moatize region up to Nacala ports, plus to improve the passenger service and to improve the service for general cargo as well.
Transnet won the business on price and quality and the proximity of the two countries.
I think we offer value for money. These are very tough locomotives as well as coaches that we have refurbished from some of our stock. We put in new parts and they have been tested and and so, I mean, it is better than buying brand new locomotives for the purposes that they require them for.
The company is still negotiating the contract for maintenance, but it has the edge.
So this is a big project that is included in all that we have been doing in Mozambique and Malawi, including training of people, improvement on service of general cargo, on the railway maintenance. So this is a big project that we have here, we as CDN and CR as a concessionaire of this from the government of Mozambique and Malawi.
While the port of Nacala is under construction, Molefe says there are no plans for Transnet cargo terminals to get involved in operating that terminal, because it's more important to bring the South African terminals up to speed first.
Transnet have shown that they've got the engineering prowess to do what needs to be done. Behind me you see the first of 4 locomotives that are being loaded for CDN, which are going up to Mozambique. I'm Angelo Coppola for CCTV in Durban Harbour.
Let's still stay with Transnet. Last week, the state-owned logistics firm issued a bond worth some 750 or so million rand, only to meet a very tepid response from the market, some of whom expected more than the spread of 100 to 110 basis points from South African government debt of a similar maturity, which the company had offered. Consequently, investors only put in bids worth 122 million rand. Transnet management at the time blamed market volatility for that low demand. Things, however, changed today, with Transnet raising about 3 billion or so rand from a 1 billion rand note on offer. However, as CCTV's Angelo Coppola found out when he spoke to Transnet CEO Brian Molefe, part of the problem last week was rand's volatility.
The investors were simply not happy with our price. We wanted just over 100 basis points above the sovereign, and they wanted more, and there was a lot of uncertainty because of the volatility in the rand and so on. So to say that the bond flopped, maybe it's right, the bond did not take place, but it was because there were willing buyers. There was no willing seller at that price.
The 20th African Union Conference of Ministers of Industry has started in Kenya's capital, Nairobi. Delegates present called on governments to invest a lot more in manufacturing so as to improve African economies as a whole. When opening the meeting of technocrats earlier on Monday, Kenya's Permanent Secretary for Industrialization, Dr. Cyrus Jiru, said African governments have to do a lot more to develop and protect industries in order to help cut poverty levels on the continent. Ministers of Industry from at least 54 countries of the African Union grouping are expected to attend the conference this week. They will be deliberating on what technocrats have proposed. African experts in industrial development, African industrialists, private sector representatives, academia, UN agencies and NGOs, as well as other relevant development partners, will also be in attendance. We're taking a short break here on Africa Live. Here's what's coming up. We'll be banking on cattle, quite literally. Zimbabwe will be accepting cows as deposits to open bank accounts. We'll have the details of how that works when we return.
Africa, an amazing world, is coming closer to us. A new voice.
We have made an excellent beginning.
A new view. Let's watch together. We deliver news and views. Let's explore together. We get you inside real Africa. Every day, only on CCTV News.
Welcome back. Kenya's legislators have opposed plans by the East African states government to sign economic partnership agreements, better known as EPAs, by October 2014, saying such a course of action would have adverse effects on the country's economy. Now, in May, Kenya's Deputy President William Ruto directed Trade Ministry officials to work on the remaining points of dispute to have Kenya ready to sign an EPA deal with the EU alone before October next year. However, Kenyan legislator Joyce Labosa disputes this course of action. In a motion filed in Parliament due for debate tomorrow, she's demanding that the government doesn't sign any EPA deal in its current form. Now, according to some estimates, Kenya stands to lose up to 10 billion shillings in 2016 alone if no EPA deal is signed. Now, without such a deal, Kenya's horticultural exports, which are a pretty big foreign income earner, will attract higher import taxes in the European Union, and about 17 or so other African states will also be facing a similar penalty. Elsewhere, the Microsoft billionaire Bill Gates has recently addressed a protest rally aimed at tackling global hunger. That was held in London's Hyde Park over the weekend, saying the event was the beginning of the momentum that would save millions of lives. Gates addressed the rally, which coincided with a special meeting hosted by the British Prime Minister David Cameron, aimed at raising money for the exact same cause. Cameron's Nutrition for Growth Summit, co-hosted with Brazil, discussed the issue of hunger and looked at ways to end malnutrition by bringing together businessmen, scientists, governments and citizens as well. Now, the UK's government has committed to giving an extra £375 million, that's roughly 583 or so US dollars, to help feed the world's poorest children. Now, the London Process event was hosted by a lobby group called Enough Food for Everyone If, and it attracted thousands to Hyde Park to mark 10 days until the British Prime Minister takes charge of the G8 meeting this month in Northern Ireland, where African agriculture will clearly be on the agenda. So then, African agriculture clearly getting plenty of attention, but not all agree that this is the good sort of attention. Let's dig deep into that strain of thought. CCTV's Miriam Bemard is live in London tonight. Miriam, EU officials, are they likely to help reform the G8 food insecurity programme, or strictly speaking, is this a case of too little too late? The damage has already been done.
You know, Rama, it's a very complicated situation for EU officials trying to essentially stand on the sidelines. You know, we're talking about growth prospects for local farmers and distributors versus European and multinational companies pouring millions into African projects. Now, key issues that need to be revised are the program is planning to end free distribution of seeds, phasing out national export controls and easier access to land ownership for private investors. And these are some of the issues that that many people have a problem with, and they're hoping that the program can be revised. Now, these are reforms that basically take the power away from African governments and, of course, local regional companies and farmers as well. And we've already seen what happens when politics takes over policy in the mining industry. Without proper policy in place, backed by EU officials, the program will have problems. And right now, it's a bit mucky, Rama, for some European leaders to understand the flaws, given countries like, for example, Nigeria are getting ready for a committed $3.3 billion through the program for the agricultural sector.
Indeed, both the UK and the EU are sinking millions of dollars into this particular program. What are the likely flashpoints between the two sides?
Well, there'll certainly be a lot of friction. Now, the UK government's Department for International Development has pledged over $600 million from the UK aid budget in the next 3 years. But what they're doing differently is that the government is also taking into consideration recommendations from rights groups for supporting services to smallholders, suggesting to regulate investors from potential land grabbing, and also perhaps funding the global governance space on hunger, the Committee on World Food Security. Now, instead of that comes into play, instead of competing with it, essentially. But many experts say that David Cameron has still missed the point. Even after all of this, the UK should push for policy to ensure that smallholders produce food for themselves and local populations as well. And that needs to be implemented into the program.
Indeed. We'll have to keep tabs and see exactly what Cameron comes up with during the G8 summit. I'll leave you there for the time being, though. Thank you very much for that. That's CCTV's Mary Belmont. Live in London, African agriculture clearly getting quite a bit of attention from local and international parties as well. Let's revisit an earlier story, however. Transnet. Last week it issued a bond worth about 750 or so million rand. That, however, didn't get quite the reception they expected in the market. Bids came in to the tune of only 122 million rand. The question at the time was, what went wrong? According to Transnet management, well, simple question of market volatility and, of course, the fact that some of those who put in bids were demanding margins higher than what the company was willing to accept. Monday, however, was a very different story. Let's get some details on that right now. CCTV Sumitra Naidu is live in Johannesburg. She's standing by the latest details over there. Sumitra, Transnet moving from having a dud bond issue, quite literally, last week into something very, very successful, oversubscribed by over 3.4 by about 3.4 times today. What changed in between in terms of investor sentiment?
That's right, Rama. Well, analysts seem to think that, yes, Transnet was right when it said that it was really market volatility. It was really about timing. Transnet goes to the market quite often, and this was the first time last week that it received such a lukewarm response to its bond issue. At the time of that bond issue, it was just a few days after we had really weaker than expected growth figures for the first quarter in South Africa. We had the rand nosediving, and we also had internationally, we had this rush into back into the US dollar, which raised so many concerns about the future for emerging markets. So all of this kind of played at the same time, and of course that bond issue had a really, really disappointing run. Today, of course, a really different story. That bond issue being oversubscribed, as you say, by 3.4 times. It raised, Transnet went to the market looking for 1 billion rand. It got 3.3 billion rand. So a really strong bond issue today. And of course, really just down to market volatility. Indeed.
At the end of the day, though, if we step back looking at last week's events, combine that with the rand's volatility, what's the outlook for the South African parastatals that will be interested in issuing their own corporate debt as well? Are they waiting on the sidelines, or are they saying, well, maybe we need to go back to the drawing board?
Well, I think many of them have already factored in this risk. I mean, a falling currency would have been part of their risk analysis before they actually went to the market. It would be factored in. We have to remember that many of these companies like Transnet go to the market to look for money because they have expansion projects on the go. Transnet, for instance, has a 300 billion rand expansion project that's spanning over the next 5 to 6 years. So it needs to go to the market quite regularly, and of course it does, that coupled with other financial institutions, but it does get the bulk of its money from the markets. Eskom, for instance, also goes to the market. It has a huge expansion project on at the moment, and analysts seem to think that investors will still go into these bonds because they're looking at future growth prospects. Transnet, of course, is expanding on its rail networks. Once this expansion project is complete, it will have state-of-the-art railways. Eskom as well. Eskom is busy with its Medupi power station. That's almost done. It should be done by the end of this year. Once that's done, it will be the biggest coal-fired power station in the world. So, it's investors really looking at future prospects. And for these companies, they can't actually sit and wait till, economic factors look much better, or the rand is, moving in tow with what they would like. They still need to go to the market to raise this money in order to get going with this. And of course, Eskom, once that station is complete, it will be able to provide South Africa with a stable power supply. And once all of its expansion projects are complete, it will be able to provide the rest of the continent with some of its power needs.
Indeed. We'll have to leave it there for the time being. Thank you very much for that update. That's CCTV's Sumitra Naidu. She's live in Johannesburg. Another rough day for the South African rand, should point out, going down as low as 10.20 to the greenback in trading on Monday. Let's move on to Zimbabwe now. It's in the news yet again, this time, however, for something more innovative and, for most purposes, positive. Now, the nation's first cattle bank has just opened its doors to offer service in a unique sort of banking service. Owners are being asked to bring in their animals as a cash deposit instead of, proper hard cash. This bovine deposit enables them to withdraw and borrow money against their value while retaining ownership of the animal at the same time. CCTV's Peter Akaba has the details on a bank that has changed the way Zimbabweans do business as a whole and how they look at their cattle forever.
Zimbabwean villager Jeremiah Gandu is making his first deposit in the bank. It has 4 legs, bellows and makes deposits of its own in the pasture. The nation's first cattle bank is now open for business, and the currency here is uniquely enough cattle. Before each deposit, the cattle are evaluated and valued by a veterinary official. Their value ranges from as little as $50 to $800, depending on their age, weight, health and breed.
I have decided to try this out by sending 2 of my cows. If it works out, I will send more.
The bank that has pioneered the foray into cattle banking, the independent TN Bank, says the livestock transactions are managed like those of any commercial urban bank. Put in the cows, and then many rural poor can have the chance of opening a bank account for the first time in their lives. Owners are issued with a bank certificate of cattle deposit as a proof of transaction.
If you look at it in Zimbabwe, we've got something like 5 million cattle, and 4 million of those are owned by the communal people. And yet we say they are poor. If you put a value of even $300 onto one cattle, they are into billions. So that's a resource which is not being utilized. The farmers just have the cattle. They don't have any leeway to access anything.
For the first 2 years, the cattle remain with the bank and accrue a 10% yearly interest. For instance, if a farmer deposits 24 cattle valued at some $10,000, that farmer will be getting $1,000 interest in a year, which the government can then give as money or cows valued at that amount, as interest can be paid either in cash or in cows. For the farmers who are also faced with depleted grazing, the move has added advantages.
The obvious benefits, that by giving us their cattle, they've taken away the need to head the cattle themselves. In some areas, the amount of grazing is getting lower and lower, and the animals, you can see they are suffering.
Right now, considering the state our grazing lands are in, it's better to give the cattle to TN Livestock Trust. There is nothing for the cattle to feed on.
The bank picks up the cost of transporting the cattle from outlying areas to paddocks that it has set up across the country, where fattening programs and crossbreeding have been introduced. Many cattle owners may in the past have been reluctant to give up their prized possessions on 4 feet, given the status symbol that they represent in society. That is no longer the case today, as Zimbabwe's farmers are now cashing in on their cows without having to sell them. Peter Okaba, CCTV.
How about that for bovine banking? Let's make a quick run through the markets for you, see exactly what your money has been doing. Bit of a mixed bag right across the numbers in the markets for you today. The Nigerian all-share ending the day in the green by just under half a percentage point. The all-share index in South Africa also in the green, up 0.7. The 20-share index in Nairobi, however, starting on a relatively slow note, down by about 0.1. And the Egyptian market ending the day in the red by almost 3 percentage points. Some fairly staggering numbers out of that. Today we'll have more details for you on that tomorrow. That's it for BizAfrica today, though.